Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard.
John, welcome back to the show.
Jim, pleasure to be back.
John, what do you think of Canada's recent order that Chinese companies divest their holdings in 3 lithium juniors in Canada?
Jim, I can only shake my head at the monumental stupidity and hypocrisy of these orders. They seem completely arbitrary and capricious. The lithium world is going to need 10 times as much lithium by 2035-40 than is being produced now. The Australians and the lithium triangle, they will produce probably half of the tenfold increase required over the next 5 years. But the other half is going to come from the pegmatites that are in these Archean cratons, such as Eastern Canada, Scandinavia, Africa, and Brazil. And it's not going to come from one giant Greenbushes deposit. It's going to come from many small to medium-sized pegmatite bodies. And this is essential for the electric vehicle replacement of internal combustion engines to have happened by 2035, where California's mandated it and the European Union has also mandated it. So picking on 3 of the sort of 100 Canadian juniors that are already involved in lithium and saying, no, you have Chinese shareholders, that's not allowed, it makes no sense. Now one of them is a company that doesn't even have a Canadian lithium project. It's Lithium Chile. They have projects in the lithium triangle in Chile and Argentina. They raised $28 million at 95 cents from a company called Changxi Lithium for these brine projects in the lithium triangle. It's not Canada's job to tell a junior who can invest in a project that's in another country. That's the job of Chile or Argentina to complain about if they don't want Chinese money developing their assets. If I were in Argentina and looking at this, I would confiscate the Rosaro project and hand it to the Chinese. If the Canadians say, no, this you can't have Chinese investors. This is just really plain stupidity, and I think it really jeopardizes the status of these Canadian juniors. I mean, why is the government interfering in from whom these juniors are raising capital? Now, the case of Power Metals, it owns the Case Lake project, which is in Ontario, north of the Timmins area, and this is still an exploration stage project. It doesn't even have a resource estimate. But late last year, Sinomine bought 7.5 million shares for $1.5 million, and it gets to have an offtake agreement. Now, maybe it's the offtake agreement that bothers the company, or bothers the government. But really, this is an early stage project. Again, one of the dozens and dozens of juniors that are emerging as part of Lithium Mania 2.0, who are all going to need every dollar that they can raise to demonstrate that they have something big and rich enough to develop into a mine. And this company is run by, or its exploration VP is Julie Selway. She is an expert on Canadian pegmatites. And for the government to target this company and say you need to force the shareholder to give back the capital and not be part of this makes no sense. And it's absolutely hypocritical too. Sinomine bought the Tanko-Burnick Lake operation in Manitoba from Cabot, a few years ago. This was mined mainly for cesium, but the lithium was left behind because the lithium market was so small. Sinomine is a big Chinese company. Why are they telling them you can't own an equity stake in an emerging exploration junior, but they're not telling them you're not allowed to own this former operation, which can be used as a processing facility for new discoveries in that whole area of Manitoba. This is crazy. And then the third one, Ultra Lithium, it has the Laguna Verde brine project in Argentina, and it has a 40% net stake in the Georgia Lake area properties of Ontario, where RockTech is developing a lithium project. They raised $4.1 million at 18 cents from a company called Zangay, which is the government saying, we don't want you to own shares in this company. So this company owns 23 million shares, but Ultra Lithium has two directors who are based in China who already own 40.5 million shares. Is the government saying that Chinese nationals are not allowed to own shares in Canadian companies that are exploring for critical minerals? This is crazy. If they are going to worry about anything, well, let's think down the road when the project is actually at a stage where it's supposed to go into production. If you're worried about offtakes moving the spodumene concentrates to China where it never comes back, well, you can put in place export controls, just as the United States has now done for high-end semiconductors, which are no longer allowed to go to China thanks to the geopolitics. This where do they stop? If the Chinese aren't valid investors in these Canadian companies, maybe we shouldn't allow any Russians to invest. Maybe there's some other country. Maybe if Brazil swings to Jair Bolsonaro down the road and they turn into a dictatorship, maybe we should not allow any Brazilian investors. It's ridiculous. What they really should be focusing on is, supporting the development of refineries in Canada to process these spodumene concentrates that are going to come from multiple sources. Lithium Mania 2.0 is not going to be a single large solution from one mine. Now, consider the permitting cycle in Canada and its First Nations issues. This is where the government should be putting its attention, resolving all these First Nation conflicts, get everything working. Consider a single point of failure project or metal called niobium. 85% of global supply comes from the Araxá project in Minas Gerais of Brazil. The niobium is a key part of the energy transition. It is used as an alloy to strengthen steel, which facilitates lightweighting, which means that it costs less energy to move stuff from one place to another. And there's only two other mines. One is also in Brazil, and it's controlled by a Chinese company called China Molybdenum. And the third one is in Quebec, the Niobec mine, which is now owned by a private party. There is one other project in Canada which potentially could be a niobium mine. That is the James Bay deposit in the northern part of Ontario, not far from the town of Moosonee. The company completed a PEA, Niobay Metals completed a PEA in 2020, which showed that this project appears to be viable even at the prices that CBMM charges for the niobium that comes from Araxá. And CBMM has a deliberate pricing strategy where it keeps the price of niobium cheap enough, but yet so that other projects cannot go into production, but a few like Niobec and the James Bay can go into production, so that if there is a single point of failure where suddenly something civil strife engulfs the Araxá area and the niobium stops being produced, there is still some supply coming from elsewhere in the world. But this project, James Bay project, the stock should be trading between $2 and $5 based on the assessment of this PEA that they completed, and yet the stock is at 10 cents. Why? Well, they do have drill permits granted by the Ontario government, but thanks to a local political conflict helped out by outsiders who are in the anti-mining lobby, the project is stalled because there was some bogus little survey done where the group that is against mine development in the backyard of this area has managed to block it, and the company does not want to get into a fist fight with First Nations because it is in their backyard. They actually want the First Nations to be part of the whole development exercise. Justin Trudeau should step in there, fix this problem, get this niobium project on the development track, because there aren't any other niobium projects, and it is part of the energy transition. And if Toshiba is successful in developing a niobium titanium anode to replace the graphite anode in a lithium ion battery, that is going to be a big plus, and we're going to be dependent on this single point of failure project, this giant Arasha project. And there is one other deposit that's similar world-class, 250, 500 million tons of 2.5 to 3% niobium. Everything else in the world is considerably lower grade, below 1% and smaller. But there is another one like it, but it's in the northwestern corner of Brazil's Amazon basin, in a hopelessly remote location. And carbonatites, most of the world's carbonatites have been discovered through past exploration. You find them through geophysical surveys. There's lots of carbonatites around the world, but none of them approach the sort of grade and scale of Arasha. So this is the type of project where Canada should be concerned about, and maybe if they could get this going, this would be very important for their whole goals of energy transition and supporting critical metals that are trying to be developed by the Canadian juniors.
John, how did the Scandium conference affect the outlook for Scandium International?
Well, it was good to see Peter Evanson show up at this conference. They published their slide presentation, which is only 6 slides long, but they also published the script that he presented. So it was very interesting reading that. I wasn't present there myself. The company has updated its website. It no longer has all the old principles in it. It has the new people in it. I don't know why they keep an airplane in their cover. Airplanes, the aerospace sector, is not relevant to the world of Scandium, and Peter pretty much said so in his presentation. And the reason is, 10 years ago, when I started covering Scandium, we said, okay, the aerospace industry would really love to have these aluminum scandium skins that didn't need to be riveted, that could be welded together, and the planes could be lighter, stronger, waste less fuel. But the problem is, for safety reasons, there is a very long certification cycle. And the airplane companies aren't going to bother with this until they know they can just order whatever scandium they need. So this is the old chicken and the egg problem. So the aerospace demand for scandium is perpetually 10 years down the road until a primary mine comes on stream. Now, this is where the presentation was a bit of a downer, and the stock had perked up a bit to 9 cents as this conference was approaching, but now it has sagged to 6 cents, because what Peter has in essence said is that we have no intention of developing Ningen until we have at least 20 tons of scandium oxide pre-sold through an offtake agreement that allows us to finance this. Now, this Ningen plan is based on 35 ton per annum capacity, so it's encouraging to hear him say that, well, if we could get 20 tons taken care of, then we will go and build this and worry about finding the home for the remainder. During the first year of commissioning, you probably won't be doing full capacity anyways, and when others see that 20 tons, that the Ningen project is actually performing as predicted, the other 15 tons would quickly be snapped up. But he also talked about we are going to look for a partner. And this was the depressing thing, because who is the potential partner? Right now, the only demand development being done is by Rio Tinto, which, courtesy of its Sorel Tracy facility in the northeast of Montreal, where it is now able to recover scandium, it has become interested in aluminum scandium alloy applications, and it can get up to maybe 30, 40 tons per year output from that facility. That's the physical limit from the lacteo iron titanium ore feed, and then it'll have to look elsewhere if it gets if it sees that demand is going to like really blossom towards that 1,000 ton per annum potential that we can see from the various usages if the primary scalable supply were available. And Evanson also talked about, we like the $1,500 price. They used $2,000 a kilo in their PEA that they published back in 2016-17, or DFS in the 2016-17. And, but we know that the number that they can easily still make a big profit at $1,500 per kilo. And the other two speakers with juniors at the conference were Mark Smith of NioCorp and Peter Cashin of Imperial Mining Group. Both of their projects require scandium oxide prices in the $3,000 to $6,000 per kilogram range to make those projects fly. So frankly, the Ningin project is really the only option if Rio Tinto ends up saying, okay, this market is happening, we need more supply, we're going to partner with Scandium International on the Ningin project. And the market does not want that to happen, because then this company just becomes this junior participant in the growth of the scandium market. It becomes dead money. But there were other groups at this conference, such as Materion. Materion used to be called Brush-Wellman, had its start in beryllium, but has specialized in developing all kinds of complex new applications. It makes its money from the IP. It has done a lot of work involving scandium, so they were there to check that out. Bloom Energy, of course, we know has the Bloom boxes, which require scandium to make to make those solid oxide fuel cells work and be durable and not burn up as quickly as when the scandium wasn't part of it. So maybe if they could partner with one of these or even several of these types of companies who are not interested in the aluminum scandium master alloy business, if he could cobble together 20 tons of offtake from them, and then he could then Scandium International could probably raise what is now likely $100 million. And this is really a pilot plant. The scale, it's like a 200 ton per day of processing operation. It's a pilot scale project, and it can be expanded because of its modular nature. I've done the modeling, and I can see this thing can grow to 100 tons per year output, and that's just from the limonite resource. The underlying saprolite resource is lower grade, but appears to have easier processing characteristics, so might still be just as profitable as mining the limonite. And the company, Peter also gave us hope that maybe the company isn't just going to sit there and wait for the phone to ring from somebody wanting to help with the development of Ningin, but they're also going to look at turning the Honey Bugle resource into a JORC resource, so that you can see how many tons of this is sitting there not that far, maybe 15, 20 kilometers from the Ningin project. And this would be important because the Ningin site will be, once it gets going, it'll grow in stages. It'll never be optimally designed. But if we are heading towards a 1,000 ton per annum scandium market, this other deposit, if you've got a similar resource, perhaps even larger and better grade nearby, when it's time, you would develop that starting off at 100 tons per year output scale, and it probably would cost less than $1 million to properly delineate this and at least show that you have this resource here, so that when the Rio Tinto or now Alcoa are looking and they're seeing the scandium, master aluminum scandium alloy business is finally taking off, well, we can take out this company. And if outfits like Materion or Bloom have done offtake agreements, they'll probably have some riders which allow them to expand their rights as their own needs increase. This would just be part and parcel. They couldn't care less if a big giant company takes over the project and ramps it up. So these were sort of the encouraging things. Also, the Kevenimi deposit, when I talked to Peter a number of months ago, he didn't think too highly of it. This is that deposit in the southern part of Finland that the company picked up a few years ago. It's lower grade, but it is in Europe, and it is similar grade as the Crater Lake project of Imperial Mining, but it has easier processing characteristics and nowhere near the horrible remote location that with zero infrastructure that requires you to concentrate enormous distances. So the fact that he's thinking maybe keeping this and doing something further with it, that's also an encouraging sign, because when we're in this waiting game, hoping that they can get enough offtakes together on the Ningen project, the market would like to see some developments happening that are low cost. They raised $3 million. It doesn't have a high burn rate anymore. They're no longer bothering trying to develop offtake agreements in terms of like collaborating with various end users to see if they would like it. If they could cobble together Materion, Bloom, and maybe even somebody like Heinz Schimmelbusch's AMG, which is has $1 billion revenue and makes all kinds of different specialty metal products. They operate a small alloy division in the United States. They could also become a partner, say, on the Kevenini, help advance that as a European solution to the world's potential scandium demand, which right now is still like 15, 25 tons per year in a $50 million market. Nothing like what the $50 billion market that lithium is going to end up being this year based on the lithium carbonate price, and of course nothing like the $100 to $200 billion market that lithium will command by 2035, when electric vehicles are indeed replacing internal combustion engine cars, still using a lithium-ion battery.
Where is Canalaska Uranium with its West McArthur emerging discovery?
They put out a news release in late September indicating that they had drilled 7 additional holes on the new discovery that first came out in late July, and it's on the West McArthur property. It's 6 kilometers southwest of the 42 zone area where they had spent most of their time in the past few years. It was what had attracted Cameco as a farm-in partner. Cameco vested, but then declined to participate because the 42 zone just wasn't adding up to a significant resource to supplement the Fox Lake resources on Cameco's ground to the northeast. And all of this is within the C10 South corridor, which is a big conductor of graphitic metasediments within the basement rocks, sort of intersecting with the overlying sandstone at the unconformity. So the first discovery hole, 67, it yielded 9 meters of 2.4% U3O8, and it included a higher grade, shorter interval within it. It was within the basement, not at the unconformity. It was they were basically drilling a geophysical EM conductor that had been drilled in the past, but when they did a higher resolution survey earlier this year, they realized that they missed it because the conductor wasn't quite where it was supposed to be. And then they got really lucky because they hit a portion of this conductor where there appears to be a north-south cross structure, and these cross structures are really the gateways by which the hydrothermally driven fluids that have a uranium payload, they come up these, and where they pass through these graphitic beds, the graphite helps drop the uranium out, and that's where the uranium mineralization forms. And the best forms right at the unconformity, where you get bigger bulging deposits forming, as opposed to within the narrower structures within the basement. So far, they have only hit basement mineralization, similar to what they have at the Eagle Point, and it's not very super wide. but it is very rich. The alteration system is quite intense, and I've called this an emerging discovery. They also believe it is an extremely important discovery. It could end up being another McArthur River scale deposit, which is the richest and biggest of this kind in the world. Well, they set up, they drilled from 3 locations. They had 2 rigs on it. So the 2 that are close to each other, they drilled 3 into each of those, and 3 of these holes have intersected the uranium mineralization. Hole 72-3, that these are like a pilot hole with wedges being done underneath. That's why they have this dash number. It had a 12.4 meter interval with multiple sections of uranium mineralization. We don't know what it will average out, but it had a 20 centimeter segment of massive pitch blende, which is probably going to have an extremely high grade. The other holes, they did not hit uranium mineralization, but they hit evidence of bleaching and alteration. So they know this was a big hydrothermal system. The purpose of this program really was for them to figure out the geometry, because these the graphitic bed that makes up this so-called C10 South corridor, it has a southwest strike, but it dips to the southeast, and it's where these cross structures go through it. That's where you're going to find these zones of very rich uranium mineralization. And they think that based on these results, they now have a good understanding of where they need to drill to actually delineate the deposit. The rigs that they used were not ideal for directional drilling. They will return in January with a special type of rig which they can very, very well control where the holes go. They did drill 160 meter step out to the northeast. None of these holes so far have hit that point at the unconformity where the sandstone sits on the basement, or these graphite beds intersect where you have the cross structure going through. That is the sweet spot. None of these holes have found that yet. The 8th hole that they drilled, this step out, they aimed where they thought it was, but it turns out they overshot it, and they think it's only by 60 meters. So they are quite excited that when they go back in there, they will confirm this as a major McArthur scale discovery. Assays are still pending. Don't know quite when we will get them, but in early October they did announce a $8 million financing. This has been completed now. Last week they reported they raised $10 million. They ended up accepting the increase because they have presented a budget of $10 million to Cameco. Now Cameco has not participated for a while, and it ended up being diluted down so that Canalaska currently owns 78.91%. Cameco apparently is very pleased with what they have come up with there. They have 30 days to decide if they're going to participate, 21% to maintain their stake in the project. But even if they don't, it doesn't really matter. They're going to be the obvious ones who will buy out Canalaska if they do indeed convert this emerging discovery into a confirmed major discovery. All the financing was done flow through. There was 6.9 million done at 52 cents for regular flow through, and 3.1 million done as charity flow through at 70 cents. There was the unit included a 3-year half warrant at the 75 cents. And this now won't come free trading until probably early March. The stock has been weak because with these flow-through type of financings, the investors tend to be less interested in the fundamental outcome of an exploration project. They're more interested in tax deferral, and some of them are happy to clip the warrant. The regular flow-through investors, they won't be selling any stock until January, because when you take the entire flow-through write-off, your cost base goes to zero. So if you sell it in the same year, you're stuck paying a capital gain on whatever it is that you pay, which is why flow-throughs tends to be done in the last quarter of the year to defer the tax hit to the next year. The charity flow through, it's different in that the purchaser writes off the entire amount, and even though it has now a cost base of zero, he then donates it at the purchase price to a charity, so he gets the write-off twice. And this works out really well if you're in the highest income tax brackets, like over 50%. You actually make money, plus you get to keep the warrant, and of course you get to donate to your favorite charity to make this happen. And the charity itself, the markets, of course, it's deemed at 70 cents, but the stock was down at 40 cents. It ends up pre-selling that position to ordinary people who, maybe American residents who buy it at a discount to market. They don't take delivery until it's free trading, 4 months later. But it's all set up. The charity ends up with cash, and any cash is better than no cash to pursue its objectives. And for the company, it's great in that they get to raise money at a premium to the market price. It was disappointing that the Canalaska stock price has not done better, but as I've argued, we are in a bear market, and emerging discoveries, they exist. The stock's sitting here. They've got enough information now to understand the geometry at West McArthur. They will be going back with a $10 million program in the new year with a proper drill, directional drill, so that they can chase this. And so the weakness in the market, some of it may be coming from the charity purchasers already pre-selling just to grab their nickel or dime that they may see in the market. So that's kind of hanging over the market. But in general, it's the fact that we have this lull and expectation that, assays won't be flowing from the new drilling next year until the second quarter. So there'll be a bit of a window of vulnerability where all these flow-through people might be tempted to dump into the market. Maybe we're in a better market by this time next year. But for now, the market's just looking at, okay, this is the end of the year. We have this flow-through overhang to deal with. We have maybe some good assays coming, but they don't yet define size. They just confirm that, yes, this is a significant new discovery. As far as I'm concerned, this is now an excellent opportunity to accumulate Canalaska uranium ahead of confirmation later this year that we have a world-class uranium discovery in the Athabasca Basin on our hands.
John, thank you so much for the update.
You're welcome, Jim.
We've been talking with John Kaiser. I'm Jim Goddard. Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.